Hey traders, this is Christian from Tribeca Trade Group, and this is a quick end of day video for Friday the 4th. A whole bunch of events today. A lot to get through. I was joking around on Twitter earlier, just saying, your head has to be on a swivel on days like this, right? We got the jobs data that came out. We had Mester give a couple different interviews on TV today. We had Powell today, and Yellen and Bernanke too, which I thought was really interesting. So nice to hear Janet Yellen's voice again. Very soothing to the markets. And then we had a whole bunch of news from China overnight too, which I think kind of got overshadowed. I know that the story that I keep hearing, when they say positive news from China, they're talking about trade talks resuming and so forth. But I think this is more important. They're easing, right? So they cut the reserve requirement for banks by 1%, and they're going to ease again. So that's really good, right? I mean, that's going to bring liquidity into the system. As we went over, if you did not get a chance to listen to our member webinar last night, I thought we brought up a lot of good points there. So I was probably, I went through a lot of risks in the market, some of which, kind of turned the page or turn to the positive side today. I thought the Fed and China. So two big things kind of came out today and last night that kind of took those risks down a little bit. Still, they're still out there. We don't know what the Fed is going to completely do, but it's a much better picture, I think, than it looked yesterday, where I was talking about some pretty bearish stuff that we were seeing in the markets, and a difference that really a day makes. I mean, it's pretty tremendous. So what are they looking at now? This is Fed Fund futures. This was all zero. They were not implying any much of a rate hike. Notice even out to March, there's a 0% chance that there's a hike. There's even more of a chance, it looks like, than that an interest rate cut is going to happen. So when when they kind of come out and change the game plan a bit, you see a whole bunch of different things moving. One of the things one of the stories that's been in the headlines, and it's nice because ETFs, you could see all of this stuff. But look at the bank loan. This is or senior loans. This is BKLN. It is pretty much bank loans. Look at the volume today and look at the move. Right, these things don't move. Look at how much they normally move. Like 10 basis points. Today I think the biggest or the second move ever for this product. The other one is SRLN, but a lot of, I mean, talk about, really moving things more than normal. Again, look at how much this normally moves. And this is another one. This is the Blackstone product for senior loans as well. So pretty big stuff. And if you carry that over to high yield, big move up in high yield. We talked about how I think it was about a week ago, there was a really nice J&K trade that went up, and I think this one was it. It was for 30 cents. This basically printed close to a double today. This got to about 55 cents today. I mentioned March 34. This is the other product. So there's two major ETFs, J&K and HYG. But I mentioned I thought this was pretty feasible. March 34 calls, and we got there. This trade went up on the 2nd. So yeah, it did. Sorry, I'm getting my days confused. I thought it was a few days ago, but this was just in the beginning of the week. So 2 days ago. Pretty smart looking order, hindsight, but those were the March 34 calls. Went up for 30 cents. That was what, a $600,000 order, so they probably made about $400,000 on that today. And I don't know if I didn't see if they unwound that, but I thought the risk to return was pretty good. So anyway, let's get to the equity markets. I wanted to talk about some of the things that I put out on Twitter. I talk a lot more, obviously, in the trading room. What I put on Twitter is basically just a fraction. I know other people who actually I did a lot of tweeting today, but other people will just nonstop tweet because they don't have a trading room that they run all day, which is my number one priority. But there are a lot of, I mean, a lot of points to make today, and a lot of things moving. So one of the reasons why I wanted to do this video, just to kind of talk about the intraday volatility. That's something that we touched, that I've been talking about for the last couple weeks, but definitely touched upon in last night's webinar. I mean, these moves intraday are crazy. And I think today there was a stat that I saw that was put in our trading room. Thank you, Mr. MQ. Today marks the 86th time, only the 86th time since 1980 that the SPX gained 3% in a single trading day. So, and just considering where we finished yesterday, which was bang on the lows, the day after Apple report, kind of came out and shocked everybody, or shocked some people, I should say. But when the Qs finished on the absolute lows yesterday, they go ahead and do this. And again, I think a lot of that, why we kind of started where we did this morning, I think was China. China was up well over 2% last night. So again, really nice to see that. So Qs, yeah, we kind of we took back. We're reclaiming some some territory just all in one day. So that's at the 20-day moving average. That'll be something to watch next week, but definitely a fake out, right? And there was a lot of names teetering on basically breaking down. So this kind of came at the right timing in terms of things that happened in China and things that happened, with Powell speaking. So I think pleasantly surprised is how I will call it. That's what I mentioned in last night's webinar, is that I would be pleasantly surprised if he changes his tone. So great to see that, that he is mentioning some of the risks that I think the majority of traders and investors know that are there. So it's nice to see that he acknowledges that, as well as Janet Yellen, and I don't know, maybe Janet Yellen and Bernanke gave him a talk to. But anyway, we'll move on here. IWM, which was also this one, kind of looks pretty good as well. So again, just one day, it's one of those cases for me, and it's something that you learn over time as a trader, is that just patience, especially watching the tape all day long as I do and seeing calls after calls after calls today. The market will be there for us next week, and I don't have to really add, a lot of positions. What I do is I kind of build a watch list when we have some nice price action. There's plenty of names. I'm not really going to go into all my names on my watch list, but maybe just a couple in the software space that I'm looking at. Zen, I think, is really interesting. It did not close on its highs, but as long as it closes above the 200-day moving average. I mentioned the 200-day moving average a lot, as well as other moving averages. Really, they give me just a stop level, a level of resistance and a level of support for me to kind of get in and out of trades. Mention that, again, I'm going to repeat some of last night's webinar, but that's what it's all about, is just defining your trade on entry, where you think it can get to, where you want to take targets, and where you want to take the trade off if it doesn't work. And believe me, it's okay to be wrong in this market. There's no way that you're going to be right. A couple of the tweets that I sent out earlier, which I think were pretty well received, is that you cannot be stubborn in this market. If you're wrong, it just, it is what it is. Move on. Small paper cut, small loss, small paper cuts, trades where you just lost a little bit. Not the end of the world, right? You just don't want to have any big losses when this market really moves. So if you kind of came in today thinking that we were going to go down, I mean, listen, I thought that Powell was going to do what he always does, and tank the market. So, you listen and you change your view. If he's not going to come out and do that, I mean, I bought puts right before, the meeting as we were rallying pretty hard. I said, I'm not going to get fooled again by every time this guy speaks. But that's fine. You just kind of change. I put on an FCX put trade yesterday. I did not want to be in the metal space when, I mean, SLX, which is the steel ETF, biggest gainer, I think, in like in sector in smaller groups. The SLX finished up 6.5% today. So if things are gonna rally like this in your face, just take them off and move on. That's you have to quickly kind of acknowledge that the market is moving against you, and not get hit with a big loss. And I think the FCX that I got into yesterday, the puts, I got in for 43 cents. I took a target yesterday at 50, which again is important to take targets because this market, you really difficult in especially in options to hold out for big winners. You could let that last piece ride, but so FCX, to kind of give you an example of a trade that did not work, I took a target yesterday. It did finish off the lows yesterday, and I took the trade off today, I think, for 33 cents. So I lost 10 cents on the trade, and that's it. You move on. But there's just too much strength in copper for me to, be stubborn and double down and, forget it. Just move on to something that is that you can make money, and instead of dwelling on a position that is not working. All right, so that's kind of my philosophy. I wanted to add on 10 trades today, but the only one I did today was INSEE, which this is a name that I saw yesterday. Look at this nice move today. And we talked about this closing on at the 200-day moving average yesterday in the trading room. So I like this a lot, and just because I like it a lot, it doesn't mean it's going to work. I have my stop right at the 200-day moving average. So a couple. So I mentioned Zen. Keys is another one that looks pretty interesting. And there's a number of software plays. I mean, so again, I'll go into this more in the member newsletter this weekend, which you have to be a member for. Go ahead and sign up at tribecatradegroup.com. It's $7 for the first week. But the basics. If you haven't tried our trading room before, we work very well as a team. It's very much collaborative. I like to get as much feedback from all the traders in the room. You guys have tremendous ideas. Some of you, if listening to this video, just crushed it. Square was a huge winner for some people who put this trade on yesterday, but just tons of examples of that too. So we could look at a couple other things. Amazon. So yeah, things are going to be hitting overhead resistance. So you might see more of backing and filling. Really based on the way that the market is moving. Interesting that you kind of have this one big up day, a couple of smaller days, another big green day, just an inside day yesterday, and another big day. Netflix was the star. Netflix really did a good job yesterday, holding in there. Possibly because it just has less exposure to China. But look at the move. Double, two positive notes out by brokers. But this gave you an indication yesterday with a relative strength, and it closed on the highs, finished up 9.7%. So this video, of course, is for information purposes only, not giving any advice. But the smaller positions, the less quantity of positions that you have on, and the smaller positions that you have on can allow you to be more nimble. Again, something that we talked about in last night's webinar. One of the things that I've switched to, like with INSEE, for example, it just allows me to kind of chill out with some positions that I think might work for a couple days to a couple weeks. Just trading stock. The options are just too volatile. And you could see which I want to talk about the VIX too, but the issue is when the VIX goes from where we started the week with like a 27, 28 down to a 20, where we finished 21 today in the VIX. The implied volatility, which is a component of option pricing, gets crushed. So the price of your stock of the option will go down, even though the equity is going up. And if you're not familiar with that concept, you could certainly Google it on Twitter. There's a number of books to read, but when the VIX, volatility is a component of option pricing. So when this VIX gets smashed from 35 to 21, what happens? Your option price goes down. It's one of the components of Black-Scholes option pricing. Very important to understand that. So what have I been doing? I've been owning stock a lot more so that I don't get hit, right? Because it's kind of it's like swimming against the tide when you have volatility go down as it's been going down like this. But interesting what's going on with the VIX here. Look at all these red bars. So all the way down to 21. Quiet, very, very quick this happened this week, from where we hit on 12/24 the day before Christmas. VXN, which is the VIX for the Qs. Not a full breakdown, but again, progress, a lot of progress there. And then finally, the VIX for IWM, also moving down pretty decently. A couple other things to look at today. I mentioned China. The Chinese Internet ETF. We did see a decent amount of, a lot of trades that went up in this space. So do I want to go nuts and add a whole bunch of Chinese internets, even though we're seeing a lot of call activity? Momo, IQ is another name. That we saw repeat activity, February 17.5 calls. BABA, which we always see a lot of two-way activity in BABA. Yeah, I don't know what they're doing with these deep in the money stuff. I don't know. Somebody asked me about that yesterday. It's really tough to tell with what they got going on in that. JD was a big name today too. I think this was up over 9%. I'm long WB, and I actually took a target in this because it's volatile. This thing was at $55 yesterday, up to 61 today. So, you kind of have to force a little bit of targets when you've been holding positions and they've been going back and forth, and then you can leave the rest of the position on. All right, so what else? I think the video is about 17 minutes long, but basically that's the main message. I think is just to kind of stay nimble. There'll be plenty of opportunities the way this market is moving, and not just in equities. As I talked a little bit about that BKLN trade. Oh, high yield spreads. That's the other thing that I wanted to cover. Big move down in the high yield spread, right? Bonds, Treasury bonds were ripping. I covered this TLT. Made a lot of reference to this. This is basically what happens with a VPOC, by the way. Once price searches this out, an area of high concentration of buyers and sellers where we have not revisited, usually you see a reversion, right? You hit this and you revert back a little bit. Now there is another one back all the way up here, but I would expect to see a little bit of consolidation after that VPOC being down. Also the dollar, I think there's also one of those VPOCs down here that finished down on the day. The yen, which was also screaming earlier in the week, came off down 70 basis points as well. All right, so we'll leave it there. A lot of stuff to go over this weekend in the newsletter. Can't wait to put that together. And yeah, would love to see you guys who listen to this video every night. Would love to see you guys check out the trading room. It's I know that some trading rooms they're not good, and I've had that experience before as well. We do things differently. We're all about making money together and sharing ideas and growing and learning and improving trading. So thanks for watching. Have a great night, everybody. See you on Monday.